Rbit, thanks so much for making the time to come on, mate. I really appreciate it.
Hey, thank you for having me.
Yeah, legend. I remember It's funny that I'm really glad you came on because I read a interview with you. Geez, maybe a year or two ago, and I really enjoyed it. And I messaged you, and you were really kind, and you took the time to reply, and I really appreciated it. I know you've been in crypto since or you've been involved in crypto in one way or another since 2011. Like, how did you get started, man?
Yeah. Well, back then I was in high school, was fairly young. Just heard about this thing I think on 4chan or something. I was very young, not knowing anything about finance or any of that. So that really resonated with me. It seemed like something that was made for me in some way. I didn't feel like the regular quote unquote system kind of made sense to me while I was that young. So I kind of took an interest in it. And I started mining it a bit for fun. Back in the day, it was looking back now, it seems like 2011 was such an easy time, but actually, it was already getting a little bit competitive as far as mining goes. I think the best time was like 209, 210. But in 2011, if you just had a regular computer, it was already quite a bit more difficult. So I would try to mine a bit, and then I was also, playing WoW and whatever, and I didn't want to use all my computer or my CPU to mine, so I will stop it fairly often. It was nothing too serious. Then a few months later, I got a little bit more serious about it. Tried to buy some. Uh, Basically, back in the day, there were some USB sticks. They were basically small miners. They'll make it easier for you because you will not use your internal CPU, and they will be a little bit more optimized to do that. So they're a bit better. So I got a bunch of those and mine bits, but back in the day, it was quite hard to see how serious this was going to become. It was not easy to be careful about it because maybe you mine for a week and you mine like $2 worth of that, or in the last minute. So it was not easy to see that those $2 would be 10,000 bucks in the future. So I will be way less careful than I am now, obviously. Lost a few wallets, you know, but it was all pretty fun, pretty interesting stuff. And then after a while, when first few paintings started to come out, Antigox, Kraken, I got on those, moved some stuff to Mt. Gox, and it's still there. And yeah, started trading with just manually, just spot, buy and sell.
And that was all directional at the start, or was that did you sort of have
Yeah.
were you just doing like directional stuff, or were you trying to? I know some early guys were like arbitraging different exchanges, and there'd be like percents out of line. Were you doing that, or not
No,
really? You were more so just like directionally trading.
it was too early. Back in the day, there was basically only Mt. Gox, and then later on, Kraken. Um, so there was not. Well, I didn't even know what arbitrage was back then. I was really young. But even if I did, would not probably have done it because it was not that much money at the time. So playing directional made more sense because at the time it was the first time that price really went parabolic in a meaningful way and went into 3 digits and 4 digits. So it felt like something was happening. So little did I know.
So like, why bother with trying to arb up a few
Yeah, at the
percent when
time,
you
yeah,
can like double your money,
was
sort of thing.
young
So
and dumb, whatever, just balls to the wall.
yeah, legend. And so like, so you start trading on Mount Gox, which is pretty incredible because that's like a hot minute ago. When did you sort of were you at like uni or something, or was there a time where you sort of started doing it more? I know now you do it full time, but was there when you were trading on Mount Gox? Was that serious trading, or when did you sort of become more serious in your activities?
No, I wouldn't say that was serious. I had hopes, obviously, but I didn't know much about it, to be honest. And I didn't think that would be my my future career or anything at the time. So I left after Mt. Gox happened because I was kind of pissed about it, and it really felt like um, like the industry was in a bad place. There was no industry really actually at the time, basically almost. So the main venue that just went down. So it felt like that could be it. So for a few years, I didn't do any more training. I would just keep an eye on it. Every like couple of weeks, I will pull up a chart and just you know check that things didn't take off without me too much. But I didn't really do anything. And for a few years, 2014 to 2016, I just got my college degree. I got my job. Actually, I kind of had my dream career at the time. I did what I always wanted to do, so it was a pretty happy time. Started making some money, and then later on, I came back at the beginning of 2017. I had some money to deposit, and things were looking up. Ethereum had come out, and it was starting to rocket. It went from like $3 to like $80 or so at the time, and so I redeposited and I started trading again. And during 2017, it was quite a wild year, so that's when I had to take it more seriously.
So you've got a career now. You've saved probably up a few dollars or whatever. You've got a bit of cash. When you approached crypto again, what kind of how were you trading? What kind of strategies were you doing this time? I take it there was a lot going on in 2017, so you probably had a few things you could do.
Yeah. So the very first thing that I started doing, I was on Kraken at the time again because I still had my old account, and I didn't know any new venue. I didn't know Bitmex yet. So the first thing I did was try the Kraken 3x leverage trading on ETH. So I started to manually do that, and then over the first month or so, I discovered Bitmex and all the new venues that had come out at the time, Bittrex and stuff. So I moved to Bitmex, which was kind of the go-to place at the time. It was where everything was happening basically, and yeah, the main strategy that I run in 2017, like the most profitable thing that I ever did, was the BTC forks. So in I think August and the end of October, there were two forks. The first one was BTC Cash, and the second one was BTC Gold, which was kind of bullshit. But basically, what I will do is long in the week before the fork, in the days before the fork, just low leverage, and then when the fork was about to happen, like minutes before, I will go on the ETH BTC Bitmex market, and I will basically mirror the price of Bitcoin that will go down after the fork. So we'll have a counter, and in just 1 second before the fork, I will just short BTC, long ETH heavily, like 20x leverage, and over a few minutes, I'll make 6x, 8x my equity, and then I will play the mirror version of that, a lower leverage. So basically, at every fork, I will 10x my stack. And that was my most profitable thing. Mark was so efficient about that at the time. Now you'll get, things will be front run quite a bit. The price impact will be way less. At the time, it was wild.
And how did you discover that? So like what how did you find, because that's pretty, I mean, I guess it makes sense, like retrospectively, of course, all these things make sense. But did you just see Bitcoin forks happen a few times and you just sort of watch that happen, or how did you come up with that? I guess.
Just it just made sense. So I think the first time I really just tried to do it and I had less money to lose, and then it worked extremely well. So the second time I did it even better and with much more money. So yeah, that was it. And then in that year, obviously there were many things happening. There were ICOs, which I really wish I played better because they were an absolute moneymaker if you did them right. I got on that kind of later. Then there was on BitMEX, you could scalp really. It was really fun to scalp at the time because the volatility was really high. And I remember, for example, one thing that I did was I got a cheap MIDI controller thing, so kind of like pads that DJ will use to play like samples. I don't know if you ever saw one of those.
Oh yeah, so like that a DJ uses to on their setup sort of thing.
Yeah, kind of that thing. It was a USB MIDI thing, and I built a little script to connect to Bitmex API. And so I will have keys for buy, sell, stops, limit orders, leverage, all the settings on the UI. So basically, it was to scalp really, really fast. That was, not tremendously useful, but it was kind of fun. It was maybe the first time that I kind of sat down and really concentrated on the microstructure of things, like waiting for the order book to flip and almost take out the best task and just lift the ask at the last moment. Obviously it was not what I'm doing now, but it was kind of my first approach to faster stuff, really.
And so like with that, so when you were scalping the order book, because I've heard a fair few people talk about this scalping the order book on Bitmex, and I think even if you look back, that fucking idiot from Alameda Research, Sam Charabuco, even talked about it. So it seems like a few people would, that it was possible and probably a bit less competitive than it is now. What was the strategy with scalping on there?
So obviously, I don't remember to 100% detail because it was quite a few years ago and I was much less knowledgeable. But basically, what happened was that the spread was wider, there was less liquidity, and the price moves were had much more impact in sense. Like for example, right now, if you look at Bitmex and Binance, maybe the price moves a little bit on Binance, and then when it moves enough so that it makes sense for Bitmex price to move with a different tick size and different fee structure, then Bitmex immediately and very efficiently moves and doesn't move any more than it needs to, because the bots are smart. First, they're all bots, and then they're actually very smart. So they use IOC and limit orders instead of markets. They're careful. Back in the day, there was a lot of manual action, and they were just slamming the market. So if the market moved up, like I don't know, $10, which was much easier back then, and the volatility was higher, big max would move like 15, 20, just in 1 week because people just ate into thin books. So what I will do is usually lift the ask and then put a limit order at the same time a bit higher, like maybe $15 higher, because you have the rebate. Now Bitmex free structure, I believe it changed to like 5 bips taker and 1 bip maker. At the time it was 7.5 bip taker, and you had a 2.5 bip rebate on the maker. So basically, if you lift it and the price moved immediately, and you had a limit order sitting there, you will get hit almost immediately, and you will pocket quite a bit of price change plus the rebate. So it would be pretty easy to do.
You're doing this in 2017. You've got the ICO, you've got the ICO trades and stuff. Were there any other strategies that you were doing back then that probably wouldn't that they sort of have expired, or was that your like main bread and butter things you were doing at the time?
No, yeah, there were not quantitative stuff kind of do now, but there were market regimes. For example, there was a time on BitMEX as always where the volatility was really, really, really low for a while, and price didn't really trend up or down. It was literally flat in like a $20-$30 range, and then you will get wicks because I think BitMEX forced some liquidations, as far as I know. Um, so price will weak up like 3%, 2 or 3%, and then it will immediately revert, and that will go on for weeks. And then we will have a pump that was real of like 3, 4, 5%, and then it will again range for 2 weeks. So there were many of those mini regimes happening, and then you will kind of realize that it was a new regime and see how it behaved. And so for a while, you will kind of do a strategy around that. So put limit orders here and there, and try to catch the liquidations.
Yeah, it sounds like you were pretty on it straight away. Like kind not exactly market making, but you know what I mean. Like noticing that and then trading around it. So I guess so you do that 2017 and then obviously 2018, 2019. I wasn't there. Like full disclosure, I wasn't trading this obviously, so I can't speak from experience. But from my understanding, things slow down a little bit. Um, what were you active in the markets then, or was that sort of you took a step back, or what did you keep yourself busy with doing around then?
Yeah. So the last example that I told you about, the weeks, that was already in 2018. It was already in lower volatility. So basically, I didn't do too bad in 2018. For most of the year, I did pretty well. Basically, the market did a big retraces, and then the worst part was when the very low volatility came. So there was a moment for I think a few months, 2.5 months maybe, at the end of 2018, where price was at 6K, and it was at 6K on the dot. So you will watch, the tape and the order book for an entire day, an entire session, and it will move by, I don't know, like 20 bips, 30 bips for hours, like slowly going up like 20 bips, and then it will go down again, and it will keep going. Like, it was just the most boring thing. Like people watch the grass grow a little bit more exciting, and that was kind of bad because you will try to force trades because you don't get any action for months, so you'll try to still do something, and there was no way to make money. Because you couldn't even cover the fees really. So that was pretty boring. And then when the market dropped to 3K, I lost a little bit of money in the subsequent few months, and then there was a good run after that. So yeah, I kept working on it. That was around time 2018, beginning of 2019, when I realized that I didn't want to do this manually uh, much longer because when you start out, it seems easy. It seems like you just click a few buttons and it just works for you. And that was the case in 2017 because obviously when the game is easy, you like it's a whole different thing. But you don't know when you start. You don't know that it's not always like that. So it was just a very lucky period in time, and I realized that. So actually doing that full time over multiple years, it's basically it's kind of the same lifestyle that you will have as an athlete, where you have to be in shape, especially mentally, but also physically. Because I realized that your mood and how you're feeling and your mental state will impact your PNL and your sharp ratio much more than anything else, really. I realized that for a while, for a couple months, I was doing well, and then I would sleep less, get more stressed, and suddenly I will make bad decisions. I will be impulsive. I will size not appropriately. I will go over my risk limits, and I will ruin months of work just because I get stressed out for a week, maybe for something even completely unrelated. So I didn't feel like I was actually making progress that I could build on. Like it felt like a good run and not something that I can build over years and years. I'm talking for me personally, but maybe other people can do that, right? So I felt like it was not the perfect thing for me, and I wanted to move to something a little bit less on the front line, maybe, if you want to call it that. Something that I could build on and build some skills that were also transferable. And I kind of like the quant trading lifestyle, if you want to call it that, better because you just let the boss do their thing, and when you work, you're not working literally, literally trading, but you're actually. It feels like it's more slow motion in a sense. like you watch things happen and then you think about it and you make decisions and you change settings, you change things, you build code and you sleep on it, and you keep tinkering and then you deploy a new version and you try it out again. It's a little bit more
It's
slow
a lot
motion.
different to being like it's like being the general versus the soldier.
Exactly, yes. You put it way better than I did.
Yeah, like when you're so well, I can speak from experience, right? Because when you're so in the trenches and you're doing it, it's like, it's a lot harder. And then when you sort of take a step back, you're like, okay, what am I actually telling these bots to do? So and just one last thing on that 2017 to 18 period, like I can imagine that a lot of people probably thought, well, like right now, people are talking about how crypto's dead, and a lot of, it's a bit of a consensus, like, yeah, it's over. What was it like? Were you talking to other traders on Twitter around then, or and if so, like, what was the sort of zeitgeist? Were people like, yeah, that was the high watermark, like 20K is the highest Bitcoin's ever going to go? Like, what was sort of were people like, yeah, this is that 2017 was the high watermark, or what was the thought process?
Well, yeah, there was a lot of that. People, I think a lot of people stayed even after 20K. When people really left was when we were at 6K in no volatility. Because again, with low vol, it's that by 1,000 cuts. Nothing, nobody enjoys that, and it's difficult to trade whether you're quant trading, market making, or discretionary stock, whatever you're doing. There's not many ways to make money out of that. So I think that's when people really left, and then when it dropped to 3K, everybody was talking about, um, that it will possibly go to zero if a bunch more liquidations happened because there was not enough liquidity in the books to support another like major sell-off. So it felt like we were really close to that. But in the way I think about it, even if that happened, price would eventually, it would have been a good opportunity. Imagine if there was another liquidation event from 3K and there was no liquidity and the price dropped to like, I don't know, 1K or whatever. I mean, if you want to leave, leave. For me personally, it's a good opportunity. And, you know, there is a good chance that other people think the same way and buy that dip and something happens or keeps happening in the coming future. So whatever, I'm in this, so I'll keep playing.
So that's so okay, cool. And then so it comes to 2020, and this is kind of well, I'll start off with this one. Like, were you trading March 2020? If so, what kind of strategies were you running around then? And what was it like? Because I was working in finance at that point in time, and you know, it was pretty full on because and that was in TradFi. So I imagine in crypto it was, I've seen the charts. Like it was pretty full on. So were you active then? What was it like, and what strategies were you running?
Yeah. So that was an interesting time because that was about 6, 9 months after I started, developing my quant stuff. So it was at the very beginning of my um, algo trading career, basically, and I was trading less at the time because I was studying a lot of programming and I was building a lot because when you are just starting out, you have to build a ton of stuff and you are not super good at it and you don't know how to do it properly. So it's very time consuming, much more than it needs to be. So I was actually trading much less because if I were to code and look at the charts at the same time, I will do both things, badly. So I'd rather do just one at a time. But I remember that night, especially when we went to 3K, I was in a Discord call with a bunch of friends, and I remember watching it up in real time and did some trades. But um, I wish I had some arbitrage going back then because that was a wild opportunity, and it was one of those times where I felt a little bit skeptical about going really balls to the wall long. And looking back, that's the best opportunity, even for like young and inexperienced people out there. I think when there is big events happening and the big players in the market itself, like market makers, are getting blown out and are having obvious difficulties keeping up with events, I think that's when there is enough juice on the table that there's not enough people to pick it up. And I think that's your best moments to strike and be convinced. Obviously, yeah, it could still all go to zero. We weren't really close there. But that's also your best moments to pick up something that is not difficult to do at all. You know, uh,
It's always easier said than done though, because I completely agree. I remember in 2022 when 3 hours capital blew up, and Ethereum went to like $800 or like 888, and I just remember I was like, this is mental, and they were unwinding their collateral. They were trying to sell everything so they could not, you know what I mean? And then when FTX blew up in November, yeah, November, sorry, and I thought to myself like, they're probably gonna have a lot of collateral they're gonna try to sell, or like people are gonna sell a lot of collateral, and then I think Bitcoin hit like 15 grand, and that was low, and it's doubled since. But I just thought there'd be more collateral to sell. So yeah. So it must have been kind of weird though, because so crypto's like gone into this like, you know, it's used for money laundering and all this sort of thing, and then in 2020 and 2021 it becomes totally mainstream, and like, everyone wants a piece of it. Obviously, that I can imagine that would have been great for you, and you would have had a lot of flow. So what kind of strategies, and what were you mainly doing around 2020 to 2021, and what was it like that now everyone was sort of cared about your corner of the market that you'd been involved with for years?
so the very first thing that I did, as far as quant stuff goes, was basically pairs trading. So basically, would identify pairs of symbols that would have um, some, exploitable relationship. The most famous one was Sol Serum spread. So I will trade those, and I try to build actual automated strategies around those. So I spent about a year and a half doing that. So that's what I was running in 2020 and 2021. Obviously, at the time there was a lot of time spent on the practical side of things, like getting servers set up and not crashing and behaving well during volatility and not having hiccups. So that was where I spent a lot of time in the early days. And later on, that was an interesting experience because I now do a lot of statistical arbitrage, which is in a way kind of similar. It's just much more expanded and much more well done. Um, so in between those two, I also had a period of about 1.5 years where I focused on HFT a lot and market making. So I also run some market making strategies now. Um, but yeah, I wish I really had the time to dive into all those things at once. There's a lot of very fascinating things that are doable, but really you gotta pick one realistically and just focus your energies on that.
Yeah, I completely agree. And like, I was just talking to someone the other day, and it's like, what's do research other trades when you've got, are you always looking for new trades, was the question, and the answer is like, if I've got a winning strategy, no. You know what I mean? Because I'm focusing all my time on that. I'm trying to spend as much time as I can trying to capitalize on that. So yeah, that makes sense. So like, so you're market making, you're doing all these things, you're learning about, and have you got a day job throughout 2020 and 2021? Like, are you working, or are you full time trading?
So I went full time when COVID hit because basically when I started doing quant stuff in 2019, I was doing it part time, and then my job got hit pretty bad by COVID. So I wasn't working much for about 1.5 months, 2 months, and so I just said pretty much fuck it, and I just went all in. I had some savings, and why not? I was also Yeah, I was also a little bit tired of it, I guess. It was a job that I always wanted to do, but when you actually do it full time, you realize the good parts that you liked about that job. You don't really have much time to do them, actually. Like, you have more time to do them when you do it as a hobby, maybe, but when you really do it full time, the things that matter are dumber things, like more evident things, and not the cool details that you think about. So actually, it's completely different when you actually do it. So I wasn't enjoying it as much anymore, and I guess I was looking for a new challenge and something different to do.
Yeah, 100%. Even trading's like that sometimes, because like I always wanted to be a trader, and then I'm doing it now, and it's like, oh, far out. This is like sometimes, so I definitely get that. So, so once you're the sort of bull market dies down in 2022, the music kind of stops, right? So like, Terra Luna, 3AC, and eventually FTX. Did your strategies shift? Because in 2021 there was a lot of flow. Do you know what? Like there was a lot of stuff coming in. There was constantly new and exciting things coming out. Like things were pretty much, things were going up only, so you could, leverage along and just ride that out. Did your strategies change towards 2022? Like, did some of your things that were profitable stop being profitable, or anything like that? So you sort of had to like change up what you were doing.
So after 2021, I started doing market making, and it's something that I still keep doing to this day. And I usually do that on less competitive places because competing on, for example, Binance futures, on the big tickers like BTC and ETH, it's extremely competitive, and especially from an infrastructure standpoint, you need a team to handle that. And I tend to do it on less competitive places, less competitive exchanges, and that's why it works really well. You've seen the screenshots that I posted last month for the month of May, where I posted a plot of like 40 plus live sharp ratio. That kind of stuff keeps working, and it's doable even for a smaller team like me, basically. And it's also constrained in terms of capacity, obviously, because you can't scale it up to millions. So you have to have a portfolio of those things running if you want to make any meaningful money. And so that's one of the reasons why I was also doing startup, and I'm still doing it. And on FTX, we were able to accommodate much more capacity doing startup. And yeah, that was our main strategy in terms of P&L in 2022.
And on FTX, I mean, it's kind of over now, so I suppose it's if you're comfortable talking about it. What kind of like to get into the nitty gritty? Were you like trading the futures against the perps, or because I know a lot of guys were doing convergence trades and stat arb with stuff like that, where things would just get way out of line, or was it just like sort of similar coins that shared statistical, you know what I mean, that usually move together, or what were you trading and what kind of trades were they?
The latter. So we're trading baskets of different coins. We were also doing, I was doing move contracts and some of that, a bit more systematic way. But regarding startup, we were not doing futures really. We were doing some bases. So we were kind of market making, I guess, but just doing bases and capturing the spot perps spreads and some funding rates. But mostly for startup, no, we were just doing baskets of different coins, everything was down on the perps, and it's quite good.
And what would your holding period be for those?
So for those, depending on the capacity, so if you are looking for a very high capacity, obviously you cannot trade opportunistically, like get in and get out of positions. So you have to have positions always on, basically. So you have to manage your turnover in such a way that is kind of smooth and executed over time, because you don't want, if you're trading, let's say, like $10 million, and a lot of those contracts are not very liquid. You cannot just land the book when a new signal, for example, let's say you're trading a daily signal, you cannot slam the book at midnight, right? So you need to have your signal continuous, and you need to have your execution optimized to trade that over time. And basically, what we'll do is market making up to our desired position continuously. So we will basically have quotes on basically 24/7 almost, and get into new positions slowly and in a cost efficient way, and never let your deltas, and your beta be too much out of line. And yeah, that'll be it.
Yeah, it's crazy. Like how many? I mean, we know now why, right? Like, but yeah, there was so many great trades on there. So yeah, it's insane. So 2022 happens. It knocks, FTX knocks a lot of people around. Obviously me included, and like a lot of my friends. What because there was so many great trades on there. What from there till now, have you been sort of have you switched up the type of strategies you're doing now? Like, are you just doing more of the same but on different venues, or focusing more on market making, or how do you sort of spend your time now?
So after FTX went down, we went to Binance, mainly because that's where most of the liquidity is. So we adapted everything to run on Binance, and we basically rebuilt half of the infrastructure that we use for Startup, because we wanted to be more competitive. I guess what we were running on FTX was made at the beginning of 2022, so we wanted to upgrade it a bit, and we're still working on that. We're still putting on new factors and improving things. But yeah, it's been working nicely. Um, and then I also focused on scaling up the smaller market making strategies on niche places that I was talking about earlier. I realized that um, you know I guess I gave them more importance before. I guess in 2022 I was kind of looking down on them, like they're not as important as the bigger capacity things, but actually, they've been supporting me throughout the FTX fiasco. So I kind of went back on them for a few months and improved them and scaled them up. Now they're maxed out and doing pretty well. And there's a lot to learn on smaller markets as well, because when there are a lot of players, like on Binance Switcher, for example, um, it's harder to see what each player is doing. Well, if you are trading on smaller venues, it's much easier to just look at your book and notice patterns, notice specific players moving quotes around it in a way that you can track. And there's a lot to learn. Um, and also, infrastructurally speaking, a lot of quirks about venues and placements and APIs and matching engine shenanigans and things that you can use to your advantage. So definitely something that I would recommend doing to everybody out there.
I definitely agree, and like I sort of have a joke with some of my friends how whenever I talk about a strategy or someone tells me a strategy and I'm like, oh no, that's you can't get any volume in that, or oh no, it's too liquid, that's too small. It's almost like you should stop what you're doing and investigate, because if everyone thinks that, there's probably a good edge there, because if everyone thinks that, someone is there probably carving it up. And I couldn't agree more. I've had strategies where it's low capacity, like I couldn't put, you know what I mean? Like I couldn't get size on, but the amount of money I do have in there, it generates like, quite reasonable, you know what I mean? Like it makes money sort of thing. So if you get a portfolio of those, you're laughing. Cool. Oh yeah. So with that, so when you're trading on these smaller venues, are you trading like you don't have to answer this, but like, are you just trading like Bitcoin and like the majors, or are you trading like more esoteric coins that because I can imagine trading Bitcoin on Binance, trying to make markets there, it's like the most competitive market in crypto. There's just there's no way. But are you just trading the majors on smaller venues, or are you trading sort of esoteric coins?
Well, whatever. has volume really. So the difficult part of that, because if you are not careful about how you build your systems, the problem with having a portfolio of many smaller things running is that you're going to spend all of your time managing those, babysitting those bots. So today I'm very careful about how I manage whatever hiccups that might happen. So I have a lot of safety measures and automatic restarts for things if they crash. And basically, I don't have to watch them at all. I can just watch the PNL like once a week, and you know, no crashes in the last several months. So that's something really important that you have to do if you want to scale, because otherwise, if you want to do two, three, four of those systems, you're not going to have a life anymore. You're going to have to sleep with your phone on with alerts for whatever might happen, monitor everything 24/7. And at that point, um, unless you have a bigger team, you cannot grow anymore. So you need your time to grow and build more systems. So that's a crucial part of the practical side of things. So actually, I prefer maybe to do. I prefer if there was any risk, I would prefer to size down, but have more time and peace of mind to keep working on things rather than doing something that feels risky to me and then I don't feel comfortable doing. For example, I might not feel comfortable holding much money on a shady venue, but then I will have to pay a lot of attention to it, and that's counterproductive in the long run, in my opinion.
Yeah, definitely. And plus, like, we all have, I know we're all pretty active on Twitter and stuff, but we all have lives outside, like, I've got a girlfriend, I've got friends, you know what I mean? I like to go and I like to spend some of this money I'm making or losing. So, yeah, I couldn't agree more, especially when you're so deep in it. It's like, have less stress or whatever. Um, so I guess, like, do you, this is just related to what we were just talking about, but you've seen this. So if you think about how long you've been in crypto, you've been in crypto more or less for over 10 years. So you've seen it go up and down and up and down. Are you sort of in the mindset, like, I know, of course, we're not in the prediction game or anything like that. Are you sort of thinking, like, look, you know, it's gonna another cycle will happen again. It might take 5 years, it might take 10 years, but at some stage in the future, you know what I mean? So because for people like me who have only been around for like the last part of the cycle we just had, it's like maybe this is it. You know what I mean? So I know we're not in the forecasting game, but I'm just kind of interested because you've been doing it for so long.
Mhm. Well, I think with the next halving, there's likely going to be another run up. I think right now we're in a situation where all the news, basically all the news is negative. There's not much, uh, innovation out there like there was in DeFi summer and with ICOs and all those things in the previous runs. But I'm pretty sure something will come up. I'm not super. Um, there is not anything right now that I would say, okay, this is it. But I'm pretty optimistic that at the right time something will come up because you know there are also a lot of people and developers that know when to throw out their ideas. I remember back even in DeFi summer, and I mean a lot of good projects at prototypes and stuff that they were waiting for the market to pump a bit to have a good environment and good market regime to launch their ideas. Maybe they will sit on them for months. So I'm hopeful that something will come up. The difference now is that there's a lot of correlation to geopolitics and you know big events that we're living through right now. So I just hope that the situation in the real world doesn't deteriorate in any meaningful way. So I hope there is stability in the TradFi markets, if you want to put it that way, for crypto to flourish. Because honestly, I don't think it's a huge hedge against any big economical recession in the real world. So I think if another 2008 happens, I think crypto goes down with it. Honestly, I think in the down moves, beta goes up, and crypto goes down.
I guess, like, just moving on to some pretty general questions now because we covered a lot of nitty gritty stuff, which obviously I really enjoyed, and I think everyone else will as well. you've been doing this for a while, so do you have any advice to like, but you're still relatively young yourself. Do you have any advice to younger traders or traders who are just starting off and they're trying to make sense of this environment or this, these crypto markets and they're trying to work out how to, go about it sort of thing?
Yeah, I will say pick up the free money on the floor when it happens, like be it once a year, twice a year. I think that's the best advice that I've been given and the best advice to give. So don't stay there 24/7 just clicking and wasting a lot of money on fees. Just study and look at what's happening in the market and try to build an understanding of it. But really, the time to pounce is when a big event happens, everybody's in distress, and there is money on the table to pick up for free. So that's your best bet. And also, I'll say don't spend a lot of time paper trading if you're doing that manually, because the psychological aspect is not there. You should do that in a quantitative way because it's not realistic. Like you're gonna fall into so many uh, traps doing
So,
that.
man,
So you,
yeah,
yeah,
yeah.
it's gonna take you years to get something decent out of a simulation, like a realistic simulation. So I would rather say just build something simple in Python, just deploy it and run it live for real with $100. See what happens, and get your hands dirty.
I think even MGMR said that he's like in one of his podcasts. He's like, just put $100 up, just do it. You know what I mean? Don't just get something running. Just something you said there. So when you said when there's free money, pick it up, and I've heard this. I've heard, obviously MGMR, like I've heard this a few times. When was the last time there was free money on the table, and what are some examples of trades where you would say like the risk to reward was so skewed you would in fact call it free money? Because I don't think you would say that lightly. So are there any examples, or when was the last time you had that opportunity?
Well, the most recent and very obvious one that came to mind was when FTX went down. So when FTX went down, if you went on Binance, and well, it's kind of well. Let me reword that. So when FTX went down, if you went on Binance, for example, I will look at my fair price of my market making bot against Binance fair price, and it's usually obviously pretty close within bits. But when FTX went down for the next few days, it was way off, and my fair price will move in a really predictive way. So there was so much money to be made just simply using the fact that a lot of market makers were in distress because they lost a lot of money and they were sizing down on all venues, presumably. And the market was really inefficient for a few days. And then liquidity came back gradually over the course of 1, maybe 2 weeks. And everything stabilized and went back to normal. But in just the next 2 or 3 days after FTX went down, it was so easy to predict pretty big moves.
Yeah, that's incredible, and that's just because like yeah, I suppose it makes sense because there's less people available providing liquidity, so you're able to do that by looking at the fair price.
Yeah, I mean, just building a simple fair across, multiple spot venues, few perps.
So, and I know you said you're in a team. So, or you have been, you know what I mean. You work with some people. What like have you had any funny stories or anything happen where you just sort of turned to maybe someone in your team and you're like, this is so fucked, or like maybe it was a big loss or a big gain, or have you had any sort of funny stories that have happened to you on the desk that just sort of just that might be worth sharing because it is trading stories. So.
um, I guess the funniest one that comes to mind that I remember with a smile was in 2017, towards like November, October, November, I think. There was moments where there was a big retrace. So Bitmex was very much driven by liquidations. So price will really overextend, and then there will be liquidation cascade both ways. And I think the internal desk kind of liked that. So there was one of those moments, and I remember I was long. and was quite levered up. And I went out to have dinner at a restaurant with some friends. And in this place, the phone signal was not very good. And so during dinner, I got like an alert on TradingView that price dropped by a lot. And I tried to go out, and I tried to. So when I went out of the restaurant, it was raining. I was out in the rain, just covering my screen with my hand, trying to log in on Bitmex to see if I had been liquidated or not. And I couldn't remember my password. And it was not saved on my phone. It was saved on my laptop. And I couldn't log in, so I was just standing there in the rain for 15 minutes trying to log in and try to close this position. And then I saw the prices going way down, huge week. I was 100% sure that I got liquidated. I went back in. I had dinner. I couldn't eat. I was feeling so bad. And I went back home, and price got $2 away from my liquidation. It didn't liquidate me, and I was back in profit. And that was very funny.
Man, I could so picture your friends like you going out and they're like, what's Rbit doing in the rain? And you're just like head in your hands trying to log
Yes,
in, like
that's
just
great.
yeah, I could so yeah, like I've been
I
out with
couldn't
my
explain to them, obviously. So
Oh yeah, and non-traders will never understand like you know what I mean. It's like I suppose like if you're a cop or you're a nurse or you're in the army, like only people who do it get it. You know what I mean? So
yeah,
yeah, definitely. Yeah, that's funny. Yeah, I've been out with friends or my girlfriend or something, and something's happened, and they're like, "What's wrong?" And I'm like, "It'll take me too long, like to explain." And I suppose another thing is also like did you have any trading mentors along the way, or like anyone who gave you any wisdom, or someone who sort of because I know that you didn't come from a from my understanding, which could be incorrect, but I believe you didn't come from a prop background. So like myself, you might not have been able to spend a lot of time around older traders to sort of show you a few ropes. So did you have anyone that sort of might have helped you out early on, or even to this day?
yeah, that's correct. I'm mostly self-taught. I did have a lot of people help me along the way, and most of them I met through this community on Twitter, on Discord. I've met a lot of people who work in TradFi, work in crypto, work with big desks, market makers, you name it. And I made a lot of friends. And I guess I didn't have one mentor that really took me under his wing, but I've had a lot of people willing to help me, and I did my best, obviously, to help other people in the past 2 or 3 years. Um, so I did have a lot of people, uh, explain to me little parts of things that I didn't understand. And I guess it's kind of crowdsourced mentoring, if you want to call it that. So obviously nobody's going to tell you their secret sauce or anything, but if you ask the right questions to people who you trust, and if they trust you and you provide some kind of value to them, they might be willing to explain to you a little small details of specific things, and then it's up to you to kind of reconstruct the puzzle and do it your own way.
It's so true, and you can tell where someone is out from their questions. Like I get a lot of direct messages on Twitter, and I really do try to respond to everyone because, like I said at the start of the interview, you were so kind to reply to me last year and answer some of my questions, so I try to. But yeah, when you get messages sometimes and they're kind of like, oh, how do you do this, or very simple stuff, it's like, man, you're not really serious about this.
Yeah, exactly.
If you were, you would have like, you'd respect my time, or you'd Google this or whatever. So
Yeah. The best questions were usually there are people, and that's what I try to do too. Sometimes you get people who are like, "Hey, so listen, I've done X, Y, Z, blah blah," blah, and like really get into the details of what they're doing, and then they ask you a very specific question like, "Given that I did all this, why doesn't this work in that way?" And if it's a very specific question and it shows that you really put in your time and work, then it's worth to reply.
well, you kind of feel obligated because you're like, all right,
Yeah, exactly.
this guy's gonna rip his hair out, like he's
Yeah,
tried every
exactly.
which way. So it's like I at least I oh, and is there we've gone through a lot of the questions. Is there anything that like maybe is there any closing remarks or anything that you sort of want to say to people like if they're thinking about joining crypto, or like just anything like that, like maybe misconceptions that you had that you think, or just like wise words that you wish someone had told you a few years ago to make, that might have helped you?
Well, don't use neural networks.
Man, you got to add liquidity goblin. Don't get him in here. You two will hit it off.
Yeah, don't do that. I think do simple things well. It's apply that to everything. I think really focus on linear regressions. Um, spend months, years on that. Do competitive things in uncompetitive places, to quote Robert James, I will say. Yeah. And most importantly, I think you have to be able to recognize when the games are easy and size up. Because there are moments where not even the best of the best can really make much. When volatility is low, when market conditions are really tough. And then there are moments where any idiot will press a button and print money. And people don't realize how much of an impact that has on the outcome of your operations. So I think a really good skill to have is be able to recognize when, like in which of those conditions we are right now, and size accordingly. And don't feel too bad if you cannot make money in a super difficult month, in a super difficult regime. Like it's more important to just, you know, sit it out, and then when things are looking good, you just know when to floor it.
Oh, just survive. Like, just hold on. You know what I mean? Because like that's what I tell myself when it sort of gets a bit tough. I'm like, just hold on, because good trades are. It might be a month. It might be, you know what I mean. But you got to do the work. You got to be looking for them. But yeah, I definitely agree. And just one thing though, because I always take the opposite side. But you said when the conditions are good, put your foot down. You know, how would one know when the conditions are good? Like everything's just up only, like things are just going one way, or just like your strategies are just pumping and they're working really well. Is that when your P&L reflects it that it's working well?
Well, that's one of the things. For example, if you're doing auto trading, your own P&L can be a pretty good signal, a pretty good predictor of your future P&L or the way the market will go, depending on what you do. So definitely, there's our correlation in that. But if you are more of a discretionary trader, more of a younger guy starting out, I think the concept is when there is inflow, like when there is a lot of people coming in and depositing money and starting to trade, and competition kind of goes down, volumes go up. That's a good moment, and you can see that obviously in every bull run. You can see that in DeFi summer when you know um, DAX volumes go up and all that. It's really I don't remember who said that exactly, but I remember reading about somebody defining a bubble, and not by saying that is when prices go up parabolically, but it's when there is nobody left to put money in a thing. So that I think that's a very interesting concept. So prices can really go up way more than you think. Um, but really, the problem is when there is no more inflow because everybody is already in the game. And so the only thing that people do is get out, really. So when a lot of people are getting in, that's probably the easiest signal to spot when your friends are talking about it. When there is the Coinbase app is number one at the Apple Store. When volumes are going half steadily for months, those are the easiest way to spot it.
Yeah, and yeah, I mean, I can tell the type of trading you do when you talk about flow, because yeah, like once you yeah, I definitely agree, my man. And just for people listening, because I know we've got some YouTube followers who aren't on Twitter. Where if someone wanted to speak to you or something, you're on Twitter? I know, but maybe what's your handle? Where do people find you?
Yeah, I'm Rbit on Twitter, and my handle is at crypto_hates.
How do you spell hates?
HADES.
So crypto underscore HADES. Legend. Well, thanks so much for having me. Thanks so much for coming on, man. I'll hit stop now, and then we just got to wait a second for it to upload. But thanks so much, man.